Jai Thakkar from Sharekhan now joins us this afternoon. Jai, good afternoon. First of you on the markets. You think 83, 8400 is becoming a very important zone. It's not breaking that on the either which ways. So, you know, whatever next move that we get, either a breakdown or a breakout, would be quite important.
Hi, good afternoon, Pankaj. Yeah, absolutely. You know, this range has now become very obvious. 8300 on the lower side, and to be more conservative, it would be 8250 on the lower side to 8400 on the upside. So that's the range for around 100 to 150 points now. I think, Pankaj, it would be difficult for me to say which way the range can break out from these levels. So once it breaks out from this range on either side, it would be then, I think, prudent to take a positional call. Right now, as of now, I think, index trading should be avoided. See, I tell you the reason for that, Pankaj, is the overall move which we have seen from 6800 until the levels of 8400. I think even if market corrects from these levels, I won't be surprised, and it would not be a point to worry as well, Pankaj. The reason for that is right from 6800 levels to 8400 levels, we have seen a 5-wave rising structure on the charts as per the LA wave theory, and whenever we see such an advance, I think the probability increases that the index has bottomed out for the long term. So the question, if it is that whether 6800 in future will be broken or not, or whether the base has shifted from 63 or 60 to 68 or not, I think yes, it has with the highest probability, because the recent rally which we have seen post Brexit has in fact completed the pending 5th wave on the upside. So even if market corrects here the entire rally by 50% also, Pankaj, I won't be worried for the long term. For the short term, I believe one should actually wait and watch where this range breaks. Till it's trading above 8250, I am optimistic that the range will break on the upside. However, if it breaks 8250 on the lower side, I think thereafter the bulls should basically exit once or book their profits if they at all they have bought at the lower levels around 79 to 8000 levels, and wait and watch for those levels to again be retested, that is around 7950 to 8000, below 8250. Above 84, I think it can inch towards the previous or next swing resistance, that is 8550.
How would you look at Nifty Bank from here on? Do you think that is looking much stronger?
I don't think so, Pankaj. Overall, if you see the entire setup, right from the February lows, both the setups of Nifty and Bank Nifty are very similar. Both have a 5-wave advancing structure. It happens, though, Pankaj, that sometimes we saw that Nifty made a new high, as in the new swing high in this rally, and Bank Nifty didn't. And later on, we saw that the Bank Nifty was outperforming and Nifty wasn't. So there has been a lead and lag in both of this, but final outcome has been the same. That both have rallied and made a 5-wave rising structure. So both can correct, and it would not be that one is outperforming and another is not. In the fall, Bank Nifty may or may not outperform. I'm not sure about that, but Bank Nifty relatively being a higher beta compared to Nifty, it can even underperform the Nifty. But I'm not saying that the correction is due. But even if it corrects, Bank Nifty 2 has a 5-wave rising structure. I'm not worried about that too for the medium to long term. On the upside, we had a target of 18,300. On the immediate basis, we saw Bank Nifty forming around 18,150 to 200 levels. It just missed by a few points. So I think that's not a point to worry. Even if it corrects, I think it can go down to 17,500, 400 levels. I think those would be the comfortable level. If it corrects and dips towards those levels, it will be again a buying opportunity. As of now, the immediate support for Bank Nifty is around 17,700 on a closing basis.
Right. How would you look at HDIL? 3% higher today. Very strong move considering what some of the other names are doing. I think you've mentioned about this name earlier.
Yeah, Pankaj, we have definitely discussed about these stocks many a times on your channel. With you, I've discussed with this stock, and as I said earlier as well, that we have recommended these stocks to our clients for a target of around 175 on the upside. We have been recommending this, Pankaj, since the level of 90, and we again recommended, and we in fact quite aggressively recommended to again average it out around 52, 53 levels, and from those levels we have seen this stock getting doubled almost, right? And from the previous recommendation also, the stock is trading well above those prices. I think the rise overall which we have seen is again a 5-wave rise. So whenever we see this kind of a structure, Pankaj, I think the positional traders, they should not exit it. In fact, that gives more confidence and to us that as thought or as anticipated, the stock is performing that way. In fact, if at all we see any correction in this stock, say by around 15, 10 or 20% also, we might in fact again add this stock for a target of 175, because our target is still intact, and I think till we don't see any reversal if we don't see any negation in our view, we would not recommend our clients to exit from this stock. So my sense is those traders who still want to add this stock can continue to do so. They can buy on dips as well. Our target is 175. Now the base has, Pankaj, shifted up from 50 levels. The base has shifted to around 72. So I think the risk reward is still favorable for the bulls.
Right. As far as DLF is concerned, at 154, how would you look? Today after days, we are seeing some correction.
Yeah, Pankaj, DLF has also seen a significant move, right, from its lows, and I think the rise here too has been very impulsive. See, overall, Pankaj, what I'm sensing is, when I'm looking at the entire real estate pack, earlier when we didn't have any confidence in the sector, and there was only one stock which we were recommending, that was HDL, because there was something where we saw some clarity, so the picture was quite clear on charts there. But other stocks in real estate were not that clear. But with this recent run-up from February lows, I think many real estate stocks are showing good signs of bottoming it out. One of which is DLF. It too has a 5-way advance. I think any dip should be utilized as a buying opportunity only, and it should be accumulated on each dip. We think that the probability of this stock getting bottomed out is quite high as well. Another stock which is among the mid-small cap, is Zandu Realty. Zandu Realty too has a good 5-way rising structure. It has a good bottoming out, rounding bottom. I think this stock too may advance towards the level of 26,000-2700 levels. Currently trading around 1550 or 1600 levels approximately. I think entire real estate pack should be looked to be accumulated on any dips, because we see a good bottoming out in these stocks.
Right. Jay, just stay on with us. Markets are just about to close. Less than a minute remaining. Lupin down 1.2 but was up 8% yesterday. BPCL up about 0.3. Infosys up about 0.5%. Tata Motors DVR 1.6% higher, 295. Tata Motors was also doing well today. Adani Ports 1.3% lower, 207. Sun Pharma 776. Coal India was down about 1.4. ONGC was down close to about 1%. Aurobindo Pharma up about 2%. I think Aurobindo Pharma was among the top gainers on the Nifty 50 pack. IndusInd Bank 1.7% higher. Cipla was up around 1.3 and Ambuja Cement 0.4% higher. HUL a 0.25% higher. Bharti Airtel down about 2.5. That's the closing bell. 11 points down for the Nifty, and Sensex about 62. Tata Motors top gainer on the Nifty pack 2.4%. 466 for Tata Motors. I think it will be followed by Aurobindo Pharma and then probably some other names. So Tata Motors was the top gainer. Hero MotoCorp was the second top gainer, 2.3% higher, 3,174. Asian Paints did well, so it was up around 2.3%. IndusInd Bank did well, 1.9% higher for IndusInd Bank, 1,126. And Aurobindo Pharma was up 1.8%, 777 for that name. Tata Motors DVR 1.6% higher, 295.8 for Tata Motors, and Cipla was up around 1.3. Dr. Reddy's did well towards the end. Maybe there was some short covering in that particular name. As far as losers are concerned, let's pull up an idea. It was down about 2% odd. GAIL was down 2.4% odd. Bharti Airtel, Bank of Baroda, BHEL were some of the other losers. Jay, any view on BHEL? It's done well from the levels of 100 to 140. But do you think now time has come to be negative on this name?
Well, BHEL, see, Pankaj, I would not be able to say, or with the highest probability, as I can say about HDR or many other stocks like sugar stocks, which I had recommended way back, and from those levels it has gone 3 to 4 times. That kind of confidence I cannot see, or the development I cannot see on the charts. But yes, it has been a significant move from 100 to 140, Pankaj. See, I think there's still much more evidence yet to come on charts to believe that the bottom has been placed, but the probability still exists, Pankaj. The reason for that is, if you check out for this stock's fall, or overall decline since 2008, Pankaj. It did break 2008 lows. Thereafter, it did break 2012 or 13 lows. So this is one stock, or which is among the very rare large cap stocks which had done this by breaking 2008 and 13 lows as well. What does that mean is there has been a triple combination fall in this stock. As per the Elliott wave theory, what we say is a triple zigzag correction, that is W, X, Y and XZ, and there is nothing below wave Z. So if wave Z for BHEL has complete, Pankaj, then I think it has formed a long term bottom and around 100 levels, so it dipped a bit below that as well, I guess. And I think yes, with that case, one can bet on this with a it will be an aggressive bet. I would rather put it that way. But those risk averse traders, for them, I would like to say that there is still not much of evidence for me to say that yes, it has bottomed out. Maybe it can come at around 180, 185, 190 levels once we see that kind of a 5-wave rising advance. But as of now, for those traders who are risk averse and would like to protect the money quite a lot and have less of stop losses on the lower side, I think for them there is still not much more evidence. For aggressive traders, I think yes, they can take a chance because it has formed that triple zigzag combination. So in nutshell, what I would like to say, Pankaj, is that I'm not that clear on BHEL still, and but yes, the move is significant, and I hope that this move gets this stock well into the 5-wave advancing list, so that it can then be traded with a higher probability.
Right. How would you look at L&T? You think L&T is better poised and one can look to go long on L&T on declines?
Yeah, absolutely, Bangi. See, what has happened when you compare L&T and BHEL, obviously L&T has always been an outperformer compared to BHEL. It has not broken its 2008 or 13 or previous lows. In fact, I would rather put it that way. It has continuously formed higher tops and higher bottom on the monthly and the quarterly charts. The run-up which we have seen on L&T from 1050, 1100 levels as well, and it has also in fact risen by almost 50 or more than that percentage from its recent lows of February. So in this rally, it has already outperformed BHEL. Apart from this rally, the overall chart structure is also clearly indicating that this stock is an outperform compared to BHEL. So it's a no-brainer that L&T is definitely a far better stock compared to BHEL.
How would you look at Cadila Healthcare, Jay?
Cadila Healthcare, see, Pankaj, this is one stock which I think has corrected quite significantly, and there is quite a chance that this stock has completed its wave 4. I think it's a good time to accumulate Cadila Healthcare now. Going forward, I think we should see in coming months or quarters that this stock is again up to its previous swing highs. So this is one stock, yes, wherein one can again get back into.
Right. Aurobindo Pharma, any view? 777, it was one of the top gainers today.
Yeah, Auro Pharma I do have this stock in my radar, and I think, Pankaj, overall this chart setup is not that great, wherein I can say that one can jump and buy this stock and it's relatively quite cheaper among the pharma stocks. I don't think so. Aurobindo Pharma still looks quite overbought to me, and the indicators are still into the sell board, so I would not like to recommend a buy on this. I would rather say that those aggressive traders can actually short at current levels, with a stop loss of around 822. It's quite far. Hence, I said aggressive traders can sell with a stop loss of 822, targeting almost the levels of 655 on the lower side. One stock which I would like to recommend on the pharma space, Pankaj, which looks quite oversold and has shown a good reversal from the lower levels, is Cipla. So if you see any dip in Cipla, I think that should be accumulated at least for a target of around 575 to 600 levels on the upside.
Right. How would you look at Reliance Communication? It went to the levels of 53, 54 earlier. Now at 50 rupees 80 paisa. But you think at least it is unlikely to go below 45?
Well, Pankaj, I don't have any buy recommendation on any of the telecom stocks because I don't think that still the sector is bottomed out. So I would not like to recommend the buy. I think till we don't get a clear-cut evidences about these telecom stocks, we would like to avoid the entire sector. We have been saying the same to our clients, and we are still keeping a view intact. So it's a clear avoid for me, not only RCom but all the telecom stocks.
Right, but any view on Reliance Cap, Reliance Infra, at least on the ADAG pack if you have?
Yeah, definitely. From entire Reliance pack, what I like is Reliance Infra. I think the overall chart setup clearly indicates that the stock has clearly bottomed out, forming a wedge pattern on the longer term charts. And I think Reliance Infra has a good support at the lower levels. Even if you see around say 5-7% of dip, it should be accumulated. I think on the lower side, it has a good support at around 520, 525 levels. On the upside, I'm seeing this stock. It may again inch towards the levels of maybe 610 to 20 in a few weeks to come. Once it manages to take off the levels of 620 pointers, thereafter we can see a clear breakout on this stock, and it can also inch above the levels of 700. But for me, as of now, I think 525 is a very good support for Reliance Infra. Reliance Capital too looks good, but comparatively, Reliance Infra is better. Capital has a good support around 380 to 83 levels as of now.
Right, Jay. Thank you so much for joining us here this afternoon. Hope you have a great weekend going ahead.